Banking conditions in the third quarter of 2014 for 9th District banks were strong. Hi, I'm Ron Feldman. I'm the Executive Vice President for Banking Supervision at the Federal Reserve Bank of Minneapolis, and today I'm going to talk about banking conditions in the 9th District for the third quarter of 2014. Before I get started, let me remind you what is in the 9th District. It's the states of Montana, North and South Dakota, Minnesota, the Upper Peninsula of Michigan, and the western portion of Wisconsin. And in particular, I would highlight that on our website we have a separate PowerPoint about conditions in Minnesota and the Twin Cities. In sum, conditions in 2014 for the district were strong. There was a good improvement in the third quarter. I'm going to summarize now the three areas we follow, and then I'm going to give you more details on each. So first, in terms of problem assets, those might be loans that aren't repaying, for example. Those are already at a very low level, historically low level, and they didn't get better, but they didn't get any worse. So that's really good performance. In terms of profitability, there was a strong gain. And then finally, there was gains in the growth of loans, which is something that I think will help improve profitability going forward. So let me show you a couple of graphs on each of these points. First, we're going to start with problem loans in the district for the third quarter. And as you can see, there's a dark black line across the graph, and that shows you the 20-year median. So that's what you might want to think about as being the typical experience. And you can see, looking at the dark purple line, that that's showing you what the median bank in the district is doing in terms of their problem loans. And it's considerably below the 20-year norm. And you can see that it's remaining low. So that's good. The only area where we still see elevated levels of problem assets following the great financial crisis is in what's called OREO. This is Other Real Estate Owned, that's the acronym, and that's the real estate that banks are going to own when they foreclose on a loan and property's been given as collateral. And here you can see that that's falling in a pretty strong way this quarter, and my guess is that within a year it's probably going to be back to the normal level, which is really quite low. Let's turn to profitability. So this is really the area where banks have been struggling. You can see that in this graph, the median bank's profits are actually below the historical experience. But there was a strong increase this quarter after really not much movement for the last 2 years. So that's promising. Where is this coming from? Well, in the next graph, we're going to talk about something that's called net interest margin. That's the difference between what banks earn on things like loans and what they have to pay to get the money to make a loan. So, for example, a deposit. And that's been pretty flat for some period of time, as you can see. You can see that it's also not back to the 20-year norm, but there were strong gains there. So this is really a strong positive sign. If we look across the states in the district, you can see that profits increased for the median bank in all the states. Now, the level of improvement is going to vary by the state. Some states saw really very small gains, some states saw bigger gains, but I think what's impressive is that there was gains across all of the states. And now we're going to turn to our final topic, which is loan growth. For really a long period of time, it was pretty anemic, and it was below what the historical norm had been. And you can see we've crossed that. And in fact, now the median bank in the district is above the historical norm. That's, of course, very positive. It shows that loans are getting out there. And another way to look at this is what percent of banks are showing positive loan growth. And you can see it's about 80%. So really we're seeing most banks are growing and the growth is really above normal. What does that look like when we look across the states? You can see really that here there's improvement virtually everywhere but in the Dakotas, but that's a little misleading because the Dakotas were already having loan growth at such a strong level that even if it fell off a little this quarter, it's not a big deal. So let me summarize. The third quarter of 2014 was a strong quarter for district banks, really a pick-me-up, particularly around profitability. Thank you very much.